So with next week in focus, with the Fed in focus, so we can all agree that we are in a deflationary segment where the market is aiming towards the Federal Reserve 2% initial aspect. With that said, with the Fed meeting next week and also a CPI data before the Federal Reserve make their drastic decision whether they're going to cut by 25 basis points, because again we can all agree that the market is super overbought. And again, last year this time I can show you guys that the market rallied this time around, which is a Santa Claus rally. We got that rally and we stay above for the whole entire year. We disregard pullbacks, bad news, momentum here and there. It's all expected because we don't expect the market to just continue trending up. Then it wouldn't offer a Black Friday to us. So with that said, welcome to the channel. Please like, subscribe, and let me know in the comments how can I help to make you a better trader. So let's go ahead and break this down. So the inflation aspect of it, the Federal Reserve 2% is in target. We're looking for that with the significant CPI data that is expected on Wednesday. I'm going to clarify that to make sure that I'm saying is significant and precise. So CPI data is expected next week. And with that said, a reading of 3.3% of the CPI monthly is expected. And for the core, same likewise at 3.3. So 0.3 is expected for the core. So we're looking forward to that next week, Wednesday. The final CPI release before the Fed meeting is expected to release 8:30 on Wednesday, as I said before. Inflation rose 2.7% annually in November and increased to 2.6 in October. Prices set to rose 3% and respectively 2%. So this is something we're looking for Wednesday. With that said, the Federal Reserve is expected to either cut interest rate or stay neutral for the rest of the month. Remember, we already got what 75% cut, and we're looking for another 25% cut. So the market priced in Friday at 85% of the Fed cutting interest rate to 25 basis points. But if again Wednesday come around, if Wednesday approach and at 8:30 Wednesday the numbers are not what is expected, which is 0.3%, and I think 3.3% or 3.0%. If these numbers are not met Wednesday at 8:30, which is the CPI, which is the consumer price index, we can see a drastic shift in the market. When I say a drastic shift in the market, meaning that Nasdaq can pull back drastically. Remember, we got this pullback on in Monday. This was Monday. We got this pullback, not this Monday, but back in August, and we saw that market pull back drastically. And with interest rate upward in play, we see the market rally, keep on making new highs, breakthrough on previous resistance, and break through and keep on breaking through. We're at a new all-time high. Market priced in again 85% after Fed cut into 25 basis points this Wednesday. If not, we can definitely see we erase a lot of gain that we have. So Wednesday morning, prepare yourself. All of these stock, I can tell you that rally. Google, we can say Nvidia, we can say TQQ, we can say Apple, we can say Meta. We can erase most of these gains and come right back towards our moving average, which is our 200-day moving average. But if not, again, the market already priced in 85%. So if we do get that 25 basis points cut at the next Fed meeting, so on Wednesday we'll determine that. Then the market will push up. But if not, then the Fed won't cut. So we can expect a drastic pullback on both Wednesday and Thursday, because we're looking for information Thursday, we're looking for the PPI, and the initial claim and continuous claim. So again, Wednesday is a crucial day for the market, and also Thursday as well. But with that said, let's go down and break down some of the stocks that are expected to report earnings next week. And let's start with Adobe. Adobe is a great stock, but I think with AI play, Adobe is in significant trouble, and they're reporting earnings expected on the 11th. So let's go over and see when is the 11th. Adobe is reporting. Where's Adobe? Right here. So Wednesday as well, Adobe is reporting. Most likely after the bell, they will report earnings because it's a major company, and they do Central Standard Time earning conference call at 4 p.m., which is after market close. Adobe is expected to report. Stock has been under pressure because of the new AI. They don't see the need for this company anymore. And also, I think they're trying to incorporate AI in their app to make it more user friendly and more friendly towards new user and existing user. But the stock has came a far way and still trying to find its way back. So if earnings is good, like previously when the stock was trading at 433 and earnings was better than expected, pushed up, got rejected, pulled all the way back down. And so I will be watching Adobe to see if they get rejected. Again, most likely, I don't even know, because with Tesla, you can't predict nothing these days. So watching Adobe to see if earnings is good after market, I will inform you guys. Just remember, we have a strong resistance at, what is this, at $583, and a support at 433. So if not, I will be watching it if they get rejected. And order zone, boy, this is a bad stock. This stock used to be one of the most trending stock. You can see over the years it was trending high, and not sure what happened, but boy, if they do miss earnings, they're going to be in hot water, meaning that the stock is just going to be super, super oversold. You can see the stock trading at even $60 again. That said, I don't think that doesn't meet none of my criteria of trading. And GameStop, this is going to be a hot one for this week, because Roaring Kitty came out again this week and pushed GameStop. Let me see, I think it was Thursday, but let me go to the last 5 days. Yep. So it's trading at 26, and then with Roaring Kitty came out, said something, the stock blazed all the way to $30, a good $4 gain, and then pull on back. And I'm pretty sure Monday this is going to continue. But this is a pump and dump for me, as you can see previously. The stock pumped all the way from what, $9 to $64, and then came all the way back down. So I would stay away from this. But Qualcomm is a nice stock that I think it's earned your time, and it's looking good from what I've researched previously. But again, always do your research, your due diligence before you invest in any stock whatsoever. And they're reporting on the 12, and they're reporting after market. So this is my main stock to watch this week, which is Qualcomm. And I'm gonna draw this line, my line for my support. So if they do miss earnings, support is here because they're in AI, and I think the company is a semiconductor. But again, do your research before you invest in any stock. So a strong resistance for Qualcomm at, I would say, here at 186. So if they do beat earnings, if they make a new high, then you know that chances are the stock can continue to go up. But if they do miss, we have a support at $127 a share, and this is where the resistance and the support for Qualcomm meet my criteria. But where the stock analysis is concerned, you can see it's approaching the overbought area on the RSI and the MACD cross a couple of weeks ago, which is previous sold off, and then MACD cross, and then from there the stock has been pushing up. But I've been noticed that into earnings, most stock pull back drastically, and some stock just continue to rally. And when that day come, the stock just continue to dive deeper and deeper. This is a main example. Qualcomm stock or prior to earnings was pushing up, pushing up, pushing up, pushing up. Earnings came out, beat earnings, push all the way up, and look what happened after. The company just fade, continue fading. And also AMD as well. Prior to earnings, the stock pushed all the way up, got rejected, pulled all the way back to 132, and then pushed up to like $43, got rejected. And now, as you can see, our RSI is on the downward side. MACD is about to cross. So you know this is the stock that I'm watching because I need to get some shares in maybe at 132. So let me extend my line. So when if this stock do come back down to 132, I'm looking to get some. If not, then the next support would be at 121. So again, Nasdaq is in play for all stocks. I can say that confidently because if not Wednesday, when Wednesday news presents itself, guys, and if it's not in criteria with what the federal government expecting, which is Jerome Powell, if it's not in meeting with Wall Street expectation, I can tell you all these stocks that you're holding is going to pull back drastically. And with that said, be a lookout for Wednesday morning at 8:30 because this is where the news is going to be released. And 10-year Treasury yield continue to pulling down, which is something that I'm happy to see because for the last couple of days it has been on the rise where we have a high of I would say like 4.4. Yeah, let me see, 4.4, 4.7. Pull back, we pushed up, and now we're trickling all the way down. But I want to see this right back down to 3.6. That's the major area where we want to reach. But with all these economic data, been looking good this week. Um, Non-farm payroll was excellent. Initial claim, continuous claim was excellent. A lot with all these economic data that has been surfacing and influencing the market to go up, to have a huge impact on the 10-year Treasury yield and bringing it down. And as in result to that, we all can agree that the market has been rallying. So once 10-year Treasury yield continue to pull back, Nasdaq keep making new high, and most of your individual stocks keep making new high. But one stock I can tell you very aggressive but can make you a lot of money. Supermicro computer, take it from me, don't be late to join when you see this stock trading at $97 a share again, or even $100 a share. My plan this week with Supermicro computer, I want to get some tomorrow, but I want to hold like a light position. Why? If Wednesday news is not good, I can tell you this stock is going to pull back drastically hard. This stock is going to pull back hard. Most of the market are going to give up a lot of their earnings. So you know what's going to happen after that? Most investors are going to take profit. You know why they're going to take profit? Because most likely the Fed is not going to cut. And when the Fed doesn't cut, guys, then everything pulls back. With that said, when we continue to pulling back is where it's like another Black Friday in the market. You want to get some shares on good companies. Supermicro computer unfortunately went through a bad phase like all company does. Nvidia is facing that phase right now where an investigation is launched into them, and also Google is going through that phase too, and they recover from it just like Supermicro computer is doing right now. And I can tell you that this stock will be trading over 120 next year. Great AI company influenced by a lot of strong AI, but previously with the push up with the market cut, we noticed that Supermicro computers trading have a talent strong resistance at $50 a share. So with this pullback to $17, a lot news came out Friday that Nasdaq will wait for them to file their 10K in February. So with that said, the stock was trading at 43, closed at 43, 43, $44, and pushed up to 47. So this is something that I'm watching Monday to get some shares in, and I can encourage you that this stock is a very volatile stock. but on the long play, it will worth your time, because as news continue to surface with supermarket computer, the stock continue to rise. But that's it for today. Please again let me know in the comment section if there's anything I can break down for you, and I will do so. But until then, like, subscribe, share this channel.